Hey, Will Zimmer with the Realty team from Connect Realty. I want to thank you for coming to my buyer negotiation workshop. The whole point is just to help you negotiate like a pro in today's market. We're also going to clear up some common misconceptions about today's real estate market, help you feel more confident negotiating the best deal possible, and be able to navigate your home purchase like a pro. A little bit about me. I do have 16 years in the fire, EMS, and 911 dispatch services. I got my EMTB in 2008. I got my bachelor's degree in practical ministry in 2020 and my real estate license in 2020 as well. I am super passionate about helping people start and grow their own business as well as building generational wealth. I do apologize for the circle being here. I can't move it, but it does say building generational wealth behind it. My mission, vision, and core values. My mission is to raise up and develop forward thinking leaders through life, business, and ministry. My vision is to help see others realize their dreams. My core values are expressed through the acronym BUILD. You want to be the change you want to see in the world. You want to always utilize creativity. You want to define your intentions before beginning, lead with honor and integrity as a servant, and develop relationships with those around you. A little bit about my team, my brokers, lenders, title companies, inspectors, everybody that I work with has decades of experience in the industry and they love supporting our veterans, first responders in our community. They're all also dedicated to providing the best client experience possible. So let's go ahead and jump into it. We're going to start with some common misconceptions. That way we can understand really where we're at and where we need to go. Misconception number one is my friends and family members know real estate and they all give really great advice. While the people around us typically have our best intentions, they aren't necessarily armed with enough information to give the best real estate advice. Texas is a non-disclosure state, which means you need access to the MLS for the most up-to-date information and to be able to include all data points, including recently sold prices. And most real estate news is actually from nationwide sources. Even on a local base, it's pulled from nationwide sources and it could actually be months behind. And if you haven't bought a home in today's market, then you really don't know today's market. They might have bought and sold several homes in the past, but today's market is significantly different than the past few years. Coming out of the 2020 to 2022, you really need someone that you can trust in your corner who knows what's going on right now in today's market. Misconception number two is home buying is complicated or scary. The steps to purchasing a home are actually relatively simple in theory, but it does benefit you to be armed with the knowledge and experience to be able to protect yourself from making a costly mistake. There's contracts, addendums, amendments, inspections, due diligence. They all have a place, they all have a part, and you got to know when to use what and when it's due. Because home buying is really only scary when you don't know what you're doing. And arming yourself with as much knowledge as possible and partnering with the right real estate agent will result in the best outcome for you and it'll alleviate all of the scariness from the process. Misconception number three is the sellers really don't care about the buyer and they will screw them over to sell their home. Most of the time, we actually hear homeowners saying, I don't want to sell to investor or to anybody that's going to lease it out. I really want a buyer that cares for my home as much as we have. And the state contracts are actually written in favor of the buyer, and they give buyers a lot of points to be able to cancel the contract and still receive their earnest money back. And we'll actually go over all of the protection points before actually submitting an offer. But a lot of times, the sellers want a good buyer and they're willing to make the deal happen to have somebody in their home that's going to love their home the way they did. So, misconception number four, we're already in a recession. House prices have to fall, correct? It's not necessarily true because three out of the past five recessions, home values actually appreciated by 3 to 6%. 1991 was a recession where the home values did decrease, but they actually decreased by less than the amount that they appreciated during the previous three recessions. And in 2008 was kind of an oddity, uh, decreased by about 20%, but that recession was also spurred on by the subprime lending practices that collapsed the housing market and dominoed into the rest of the economy. So that's not necessarily a great indicator of what happens because, like I said, three out of five, they actually appreciated. Misconception number five, kind of piggybacking off that, the elephant in the room continues to be, when will the market crash? And to understand if and when the bubble might burst, we really need to understand the past few years and what actually happened. So let's look at the 2020 to 2022 market. Interest rates actually dropped down into the twos. An explosion of buyers and investors took advantage of very cheap money. Sellers also began holding off on their home for fear of securing their next one. A lot of them even said, I'd love to sell. I know I can get a great price. I just don't know if I'll be able to afford the next one. And I don't know if I can even get one with the bidding war that's going on. So they actually began holding off on selling their home. New construction also began struggling to keep up with the quickly elevating material prices and the numerous difficulties that created. So the housing market actually dwindled down to about a month's worth of inventory. In some areas, we saw it even lower. I think Tarrant County got down to the very, very height of the market. We got down to like zero point 0.7 months of inventory, which means that if no other homes were listed, all of them will be sold in about 3 weeks. So because of that, the rule of supply and demand took over and prices just quickly skyrocketed. That's when the Federal Reserve began to quickly raise interest rates to try to curb the inflation in the housing market and the rest of the economy. And the mix of residually higher home prices and the rapidly elevating interest rates quickly limited the available buyer pool. Months of inventory has actually doubled to 2.2 months of inventory in Tarrant County as of June 2023. Fewer homes are actually being listed today, while those that are remaining on the market for longer. And there's just significantly fewer buyers that have access to funds to be able to purchase homes. And in my opinion, it's just produced a neutral or a buyer's market, although the months of inventory, which is the typical gauge for the market, hints towards a seller's market being less than 3 months of inventory. So the past few years didn't actually result from any type of severe economic recession, depression, or collapse, poor or lacking banking principles, economic recession or war, or even subprime lending. The 2020 to 22 housing market was actually a supply and demand issue rather than a housing bubble. So we're seeing home values normalize and the market settle, but values aren't going anywhere but up. So let's talk about affordability and interest rates. These two actually partner together in the real estate market to determine how much house you can buy. Most people focus on the sales price of the home, but the interest rates actually determine what is actually affordable. Because prices do fluctuate inversely to the interest rates. And what that means is prices go down because interest rates go up. Prices go up because interest rates go down. So let's look at three different loans to determine what we're actually saving by waiting for the sales price to go down. Loan number one is $350,000. Its interest rate is at 2. Your monthly payment's about $1,300 a month, and you're spending $115,000, almost $116,000 in total interest over the course of the loan. Loan number two, we're going to drop a little bit because interest rates go up, but sales price is at $325,000. Your monthly payment actually went up by $500, and you're now paying $1,800 a month, almost $1,900. And the total interest you're paying is about $340,000 over the life of the loan. But wait, that means we're going to need the sales price to drop a little more, correct? Well, let's look at $295,000. But remember, when prices go down, it's because interest rates went up. We're going to look at 8% interest, which for that much of a fall, we're probably going to be the 9 or 10%, but we're just going to go 8% just as a general rule of thumb. Your monthly payments actually jumped up to over $2,100, which is almost double what 350,000 at 2% was. And your total interest over the course of the loan is almost $500,000. So you're actually paying almost $400,000 more in interest over the course of the loan, waiting for the sales price to go up because the interest rates go up, causing the sales price to go down. So waiting for that price to come down actually costs you more money in the long run and monthly than securing a lower interest rate on a higher sales price. And unless you're paying cash, I mean, you're buying the monthly payment anyway, not the sales price. And the interest rates are what varies that monthly payment. And it's better to secure a lower rate today and refinance when the rate drops versus waiting another year for and interest rates to go up another point or two, because it's going to end up costing more money in the long run. So let's actually look at the purchase and negotiations process. When do I need to start looking for a home? It really doesn't hurt to start looking online whenever you have time. You need to settle on a area, a school district, floor plan, a neighborhood. Try to figure out all of those details, or at least have a pretty good idea. That way we can actually start and get serious about 3 months before you need to move. It's going to take 1 to 3 days for the pre-approval process. It's going to take 1 to 3 months searching and touring homes. Could be less, could be more. It just really depends. Average is about 1 to 3. It's going to take a day or just a little bit longer for negotiations, depending on the complexity. It's going to take at least 21 to 30 days for your financing approval to be able to close on the. But you're probably thinking, hey, I really don't want to have two payments. I don't want to have to pay my lease payment. I don't want to pay the mortgage at the same time. I don't want to have to pay to break my lease. I really don't know if I can start that early. But we can actually line that up because your mortgage is actually paid for the month after, unlike the rent that's just paid the month of. So if you're paying September 1st rent payment, you're paying for the month of September. If you're paying for your mortgage on September 1st, you're paying it in what's called arrears. You're paying it for what is accrued actually in August is what's due in September. So we can actually line that up, and your payment could be due up to 45 days after you actually close. So it could actually put a month of no payment of rent or lease or mortgage due for that entire month. When it comes to closing, you will have to pay the interest rate that's accrued from closing to the end of the month as prepaids. But a lot of times it's just wrapped into your closing cost, and we can do various things to help you with that as well. And it just depends on how we line up closing as to when your first month's payment is actually due. So let's look at if your lease is ending in September. Say it's ending in September 30th. We want to close on or after September 14th. And because we're pushing it up to 45 days out, your first payment could be due as late as November 1st. If we closed closer to, say, September 1st, your first payment would likely be due in October. It's still not having two payments, but it's better to close in the middle of a month with the possibility of paying your first payment not the next month, but the month after. This would actually give you 2 weeks to do any repairs or updates or anything you want to do before you move in. If we're closing September 14th, lease is up September 30th, you got plenty of time to move. If we extend the closing to the end of September, you'll have less time to do any of that if you want to, but your first payment still would likely not be due until November 1st. So with a target date of September 14th to close, 30 days for financing means you need to be under contract on that home no later than August 14th, preferably a few days earlier just to give a buffer. 1 to 3 months of lead time to find that property means we need to start looking for homes around May 10th. 1 to 3 days for the pre-approval process means we need to really get serious and buckle down by May 1st in order to purchase by mid-September and move in before your lease expires, and still only be able to make your first payment November 1st and not have any payments in October. So why is the pre-approval so important, and why do I need to search for a home? Because having a pre-approval means that you can extend an offer as soon as you find the right home. You also know your price range. You don't have to settle for a cheaper home. You don't have to have the heartbreak of not being able to afford the home that you loved. And waiting for the pre-approval before you submit an offer could cause that house to go under contract before you get the pre-approval back. And we don't extend offers without pre-approval because the seller won't accept them. So having that pre-approval means we can move at the second that we find the right property. So how do we find the right property? You can ask yourself several questions. Does it flow? Does the floor plan work for me? Do I need 1 story, 2 story, all the bedrooms upstairs, all the bedrooms downstairs? Does the kitchen flow into the living room or the dining room? Or how does the whole home flow? Does it work for me? Does it grow? Will you have enough room to grow into it? What's going to happen while you're owning it? Is your kids going to grow up, or are you having more kids, or your kids moving out, or what's going to happen in the time frame that you're owning the home, and are you going to be able to grow into it and have it function accordingly for that amount of time? Does it stow? Does it have enough storage? Does it show? Does the neighborhood show well? Does the house show well? Are you going to be able to improve the curb appeal? Are you going to be able to do certain things depending on, say, an HOA? You're just going to have to take into account, will it show and how well will it sell in the future? Was it listed by a pro? This is really determining a lot of for sale by owners. They mean well, they're just trying to get a great deal. They do typically overprice their home. So if it was listed by a pro, they're going to actually run comps, and we're going to run comps as well. But we're more able to make a deal if it was listed by a pro versus like a for sale by owner. So we found a house that we love. We might have found two or three. We're trying to make a decision. Where do we go from here? Can we make an offer on all of them? It's really not a good idea. You really want to make one offer on one home at a time because you run the risk of having all of your offers accepted, and you have to deliver your earnest money for each offer that's accepted to the title company within 3 days. So you can actually tie up 5, 7, 10 grand very, very easily and get yourself in a really bad situation. So you really want to decide on the one home that you want to move forward with, and let's get an offer on that one and let's work that deal. But we also want to be reasonable with our offer. We don't want to try to lowball the price just to get a deal. A lot of people, when they do that, they're actually trying to get a steal and not a deal. The sellers will reject a steal. Uh, they don't want to leave money on the table. And it's also not just the price, but the terms that get accepted. So we will have to go over all of the terms. We'll try to structure the deal in the best way possible that the seller will accept. And we're going to actually work a deal, not a steal. Because again, put yourself in their shoes. They're not going to want to leave 25, 50 grand on the table just to sell their home. They're going to want to work with a deal and reject a steal. They'll also be advised by their listing agent to select the best offer that they're confident will close, including the finance contingency. So it's important to use mortgage lenders that we can get a hold of versus online lenders such as Rocket Mortgage, something like that, or banks. You might have a good rapport with your bank. They might be a good lender, uh, but it's going to be hard to get a hold of them nights, weekends, holidays because they work banking hours. So if your closing is on, say, Monday at 10 o'clock, they don't get in the office till Monday at 9 o'clock. They may not get their email or phone call until then, and it's probably going to delay closing. So the listing agent will be looking at that and advising on the offer depending on the lender that you use for your pre-approval. The least number of contingencies will give a better chance of having your offer accepted. And we'll go over every contingency point. We'll rate all of the risk, all of the options, and again, we'll structure the deal in the best way possible that's likely to get accepted by the seller. So we found the home that we love and we submitted an offer. What happens if we find ourselves in a multiple offer situation? Again, this is not multiple offers on multiple homes. This is multiple buyers submitting offers on a single home. And in the event we find ourselves in a multiple offer situation, we want to be prepared to write multiple offers and move very, very quickly. Basically, we'll structure the deal in the best way possible that we can get accepted. And then the listing agent will call and say, hey, we've received multiple offers. We'll be going over these offers at a certain time. Just have your highest and best in by then. We want to be able to go back, rediscuss, uh, restructure our deal if we need to, and be able to have those signed, receive them back, and send them over to the listing agent by that time to be able to be considered. We want to limit the inspections as much as possible or perform them for informational purposes only. If we have, one client who's wanted to do, three inspections and the other clients wanted to do just a home inspection, they're likely to pick the one with just a home inspection or anything that's informational purposes and will be contingent on the sale. You want to incur as much responsibility as you can afford. If you're able to pay for title, pay for a survey, pay for whatever it is, anything that's going to net the seller more money to make your offer more appealing, you might consider being able to do that. You want to ensure that your agent is following up with the listing agent's instructions and building a rapport with them. I call all of our agents. I talk to them about what's more appealing to the seller. How can we restructure our offer to have it accepted? Sometimes they give some information. Sometimes they don't. Sometimes they just say highest and best by a certain time. But you really want an agent to be reaching out and to be talking with them, seeing if there's anything that can get your offer accepted. You may also consider getting a mortgage approval rather than just a pre-approval. This actually pushes you through much of the underwriting already, and it's really just contingent on finding the actual property. And once you have a mortgage approval, your financing time is significantly reduced, and it can actually put you ahead of the crowd for just the people that just have a regular pre-approval. You also want to guarantee to pay above the appraised value as much as possible if there is a appraisal gap. We'll get into the appraisal gaps here in just a minute, but if you can and you are able, guaranteeing to pay any portion of the appraisal gap will put you ahead of the crowd versus the ones that just have the cancellation policy. At the end of the day, you just want to be prepared to walk away. If it's not good for you or it puts you in a bind, you need to be prepared to walk away and find another home. So we've got an offer, we've got it accepted, we might have even beat out multiple offers. We've got to deliver our earnest money. What is earnest money? It is good faith money that is giving the buyer skin in the game and showing their willingness to buy. It is typically 1%, could be more, but uh, typically it's just 1%, but it is offered to the seller in return for taking their house off the market. Is released to the seller if the buyer terminates for a non-contractual reason. However, there are multiple points in the contracts that allow the buyer to back out and still receive their earnest money back. There are many contractual reasons to be able to terminate, and we will go over each and every one to make sure that you are confident in making the deal and having that money at risk. But if it does go through, everything's fine. It will be applied to your closing costs. Say your closing costs are, $10,000. You put up 3,500. You'll only have to bring 6,500 to the closing because the earnest money will be applied to your closing. All right, we're going to do the same time as the option period. They can be in the same check. They're both going to be written to the title company. They will be both held in escrow. However, the option money is typically around $10 a day. It's negotiated as 3 to 10 days after the offer is accepted. A lot of times it can be 10 days, $100, 70 $70 for 7 days. It just really depends. A lot of times it's around $10 a day. This money is paid directly to the seller, however, through escrow. It is for the unrestricted right to terminate the contract for any reason during the time negotiated. This gives you the time to perform any due diligence inspections, negotiate repairs, seller concessions, or be able to terminate the contract if the buyer and seller cannot come to an agreement based on that information that is revealed. Basically, it just gives you 7 days to say, I don't want to do it anymore. I'm going to back out and still get my earnest money back. You will lose the option fee, but that is there for you to be able to do that. Your due diligence period. It's going to start with your option period. That's where you do your inspections, your home inspections, any other necessary inspections as far as roofs, foundation, mold, any others, and be able to reveal that information that you need to negotiate repairs or back out if you cannot come to an agreement. All right, so we have delivered our earnest money and option fee. We are in the option period. We are doing our due diligence. How do we master that and be able to get the best advantage of that? We want to recognize wear and tear versus material defects. The inspector will list everything that is potentially wrong with the house, and we want to be able to say, hey, what are the major systems that are wrong with the house? Is it the electrical, plumbing, HVAC, mold, anything that's going to affect the livability or the value of the home? We want to focus on that to be repaired and negotiated. Carpet, trim, paint, anything like that that's cosmetic, we really shouldn't be an issue, but we do need the inspector to verify that there's no underlying cause for that. But we want to focus on the material defects, not the cosmetic wear and tear. We want to ask the seller for seller credits or concessions. That's just money in lieu of them doing the repairs. Any material defects that come out of the inspection and impact the home's value because they want to do it as cheaply as possible. If we get the money back and pay for it, then you also get the warranty for the work. So we want to make sure that you are protected even more than that. So we would like to get seller concessions back versus them doing the work and see if we can go from there. Other contract negotiating points. This is that title policy is typically paid for by the seller. If we're in a multiple offer situation, buyers may consider paying for it. The survey can also be provided by the seller, but it is good for the buyer to purchase a new survey. That way they own it and not the seller. But if they provide their existing survey, that's also not an issue as well. You can negotiate the closing date, the possession date, if there's a residential service contract or a home warranty that's offered, any seller's contribution to the buyer's closing, and any point that's applicable on any addendum to the contracts. Every point in a contract is negotiable. Uh, Once we go through that, we're going to find the appraisal, which is a third party opinion assessing the current value of the subject property at that specific time. The lenders will only lend up to that appraisal value. So this is where we were talking about during the multiple offers paying the appraisal gap. If the sales price is $350,000, it appraises for $375,000. You have $25,000 of instant equity. Congratulations. The seller cannot raise the sales price. All they know is we made appraisal. If the appraises for $350,000, hey, we hit the appraisal. Perfect. We're waiting for closing. If it appraises for $325, that's where we have the three options. With the appraisal contingency, we can renegotiate the sales price at $325. It's smart for sellers to do that because all subsequent buyers will likely have the same issue if they're financing. We can renegotiate to a lower sales price with the buyer bringing cash for the difference, or the contract cancels and the buyer's earnest money is refunded with the appraisal contingency. If we're in a multiple offer situation, you may want to offer to pay for as much of the gap as possible. They're not always $325 for 25 grand. This is just a rough numbers just to give you an idea. So we've gone through everything and we finally got it clear to close by the lender and title. The final walkthroughs have been completed, the repairs have been done, everything's been signed off, everybody's in agreement. Cash to close has been wired to the title company at least 24 hours in advance of closing, and you bring your ID and any required documents to the title company on the day of closing and sign your loan documents. And you're able to move in once the title company releases the keys. It's basically when the finance company says, hey, everything's funded, everything's good to go. They release the keys and you're able to move in. So let's look at a couple places where buyers get stuck. A lot of them are waiting for something or have something that's causing them not to purchase. Let's look at a couple areas that they get stuck just to see if we can help you out. I need to wait one more year to be ready. What that means is you'll always be waiting for the perfect time. And if you do not have a plan in place with measurable goals, you likely will not attain that. Like most things in life, you'll never be ready until you're actually ready. Uh, if you feel that you need another year or would like to get on a plan, just schedule a free consultation today and let's try to get you on a plan to be able to purchase a home within your time frame. Waiting will only cost you more money in the long run, just like we saw with the loans several slides back. So let's try to get you on a plan that if you want to purchase a home, we can purchase it as quickly as possible. So another place that buyers get stuck is I'm still waiting for the market to crash. Unfortunately, this is where a lot of them are at right now. Market indicators do show that the market is stabilizing and trending upwards. It will only get more expensive as time goes on. The only way, in my opinion, for the housing market to crash is an entire collapse of the economy. And at that point, you really can't afford a home anyway. So you're better off purchasing now, securing a current interest rate. If it goes down, refinance. If it goes up, you've got a better rate. Another place that buyers get stuck is my family member or friend is a real estate agent, and I will likely go with them. If you want to, I completely understand and support your decision. However, this is not just a personal decision, this is a business decision. And selecting the right agent can make the difference between getting the house that you want and never being able to buy. Often, family and friends can also make the transaction complicated because they get their emotions involved and or get greedy and thinking they're due something that they're not. So be careful if you want to use family or friend, but it can be a better decision to have a neutral third party. Another place is I don't know if I've saved enough money. Creative financing and down payment assistance programs can significantly help with your down payment. There are loans that can be as little as 3.5 down. For FHA, they require lower credit scores. If you have a higher credit score and still want lower money down, you can actually qualify for a 1% conventional. It just depends on what's going on, what your personal situation is, and how we can structure the financing to work for you. We can also negotiate seller concessions to further assist. I've even had clients that get money back at closing because they received enough concessions to actually cause a refund. Obviously, you're not going to get rich on it. It's not going to be very much, but I have actually had them cover enough of the buyer's closing to get a refund at closing. Another place that buyers get stuck is my credit isn't high enough. Some people know their credit, some people don't. Some people are just assuming. Let's schedule a consultation, get you connected with a lender, and we can actually tailor a plan specific to your situation that helps raise your credit and get you to be able to purchase quicker than trying to do it on your own. We can actually connect you with a bunch of different resources to be able to fix anything that you need and give you a plan to be able to do that. That actually makes it easier and quicker than trying to do it yourself. We'd love to help you out. Schedule a consultation. Let's see what we can do. Another place is I don't know or I feel like I'm not ready. Kind of like the first one, you're never ready until you start. Don't let the fear of change or the unknown hold you back from becoming a homeowner and having at least 45% higher net worth than non homeowners. That is an actual study done by the National Association of Realtors, and they do have about a 45 or higher net worth than non homeowners. We focus on explaining the entire process to you, walking you through it as you go. You will be very confident in every decision that you make, and we are here for you. So, what is the buyer's representation agreement? And why does the agent want me to sign one? It is just that, a buyer's representation agreement. It is a contract between prospective home buyers and a real estate brokerage via a real estate agent, and it creates an exclusive relationship that allows the real estate agent to work directly with you as a buyer. It was created to protect the interest of the buyer because prior to, the only people that had representation was the seller, and they could pretty much do whatever they want. So it was created to ensure that you do not get taken advantage of as a consumer and to give you representation, because in the state of Texas, all real estate agents carry a legal obligation to the seller of any transaction, even if they're not the listing agent for the property, until they have a buyer's representation agreement in place. So, what actually is the buyer's representation agreement? Once it's established, you become a client instead of a customer. This means that we become legally obligated to act in your best interest during the purchase. We can negotiate on your behalf. You do always have the final say. And we have a higher level of accountability to you that continues even after the purchase. We are also bound by higher standards through various associations, such as the National Association of Realtors, Texas Association of Realtors, any local boards, and many more. It also defines every expectation so they're clearly understood by all the parties involved, and that can avoid many misunderstandings before they even arise. And we can advise you on any point of the potential purchase, even the potential offers. This is vital because we are legally obligated not to pass certain information to the buyer without this agreement in place. And it's designed, again, to protect you. So, what is our next steps? We're ready to start the process, and we'd like to know what to do. Schedule your free VIB buyer client consultation today. My calendar is below. Select a time and date that is good for you. Complete the buyer intake form before the consultation. It's going to gather up some important information about you and about what you're looking for, the home you want, the way we can maximize our time together in the consultation. Have all of your decision makers in agreement and attend the buyer's consultation with them. We're going to sign our exclusive VIP buyer's representation agreement that gives us the ability to represent you and to give you all of the information that we can. And we're going to develop a plan with goals as well as a strategy to accomplish that plan. And then we're going to start finding you a home. So when you schedule your free VIP buyer consultation, we're going to send you a couple of free gifts. You did get the buyer's roadmap. It was emailed to you when you signed up for this workshop. If you can't find it, check your spam or junk. If you still can't find it for about 24 hours, just let us know. We'll send you another one. We're also going to send you the buyer's guide. It's a free PDF. Goes over what we've gone over today. Some areas have a little bit more detail. We're also going to send you two buyer checklists. One guides your readiness for the purchase of a home and helps you create a plan. And then one guides you through showings and helps you remember each home, the points that you love and the points that you didn't. So go ahead and schedule your free VIP buyer consultation today, and I'll see you there. Have a great day.